Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you very much for having me today.
Well, on Wall Street, the Nasdaq Composite has broken through 9,000. The Nasdaq, of course, is heavily weighted towards tech companies. Tell us about that and other global markets.
Sure. We've been saying that the Nasdaq was the probably most attractive market of the global market at the beginning of this year, and we've been saying that the index should break well above 9,000 by the end of the year, and it seems that that continues to happen. The reason for that is because of the valuation. We think that the Nasdaq is still very cheap relative to its earnings, and we estimate that fair value of Nasdaq is well above 10,000 index level. So we think that there's still more upside left. If you look at the index's ROE, it is well above 20% plus, and it is expected to remain that high for quite a bit of time. The fourth industrial revolution is making these companies in the index look very cheap, and they continue to show high growth rate in terms of sales. As long as growth remains strong and profitability remains high, we think that the rising trend of the Nasdaq should continue in the future. In terms of the various other market, we continuously showing strength, but it seems that still the U.S. market is the one of the best performing market, particularly the Nasdaq index itself.
Yeah, and the Nasdaq, of course, a decade ago was down around 1,300, one of the best performers there. Now, also, the Korean companies are paying out year-end dividends now. Normally on ex-dividend day, you'll see a drop in share prices because buyers that day are not entitled to a payout. Korean stocks were up today, though.
That's right. If you look at the dividend yield of the Korean market, it is around 1.5% to 2%. So at the beginning of today, it actually started with minus 1% plus, but that recovery has already happened, and actually it closed with a 0.3% rise today, which means is that the overall today it's actually up more than 1.5%, as high as maybe 2%. Which means one of the strongest movement day if we look at in the recent probably several months. Korean market is still one of the cheapest market in the world with less than 1 time price to book, and P multiple remains to be a very low single 2-digit number, low teens. And we think that the liquidity condition within the Korean market is positive, and we think that the equity markets relative to property market, the valuation looks very cheap. Particularly with the next year, the chip sector is expected to show some earnings recovery, and that means that the return on equity for the KOSPI should go up in next year. And also, the Korean companies and Korean market has high dependency on global growth, and we expect the global growth to stabilize next year and maybe even show some rising trend. If that's applied, then we think that KOSPI rising trend should continue into the year 2020.
All right, and looking more broadly now, the Bank of Korea says it's going to keep its monetary easing policy in the new year to help consumer prices get rising again and support an economic recovery. That seems to imply that there's a chance of this slowdown persisting. What's your outlook on that front?
Yes. As you said, the liquidity condition should be quite ample into the future. The BOK would probably have very easy monetary policy, maybe even cut interest rate one more time if possible. But the Korean government is putting a heavy regulation on property market, which is negative implication for the overall property prices in the future. The average Korea's rental yield in city is as low as 1.3%, which is one of the lowest in the world. So which means that the heavy bubble is actually occurring within the property market, and government is trying to lower the prices, or at least not to make it that it doesn't go up further. So the liquidity condition is very high. That liquidity been going into the property market, but in the future that might not be the case. If that's the case, then the liquidity should probably go into the equity markets or other asset classes. So we do think that the overall asset prices for Korea should go up because of the high liquidity. In terms of the consumer price index, it probably remain quite timid because of the demand in the domestic side is probably limited. But because of the export side should be showing some recovery, we think that the prices in consumer prices is not going to go down much further with additional liquidity conditions applied. We think the overall should be stabilized in the future.
All right, Mr. Yu, thanks so much for sharing your insights. As always, we appreciate it.
Thank you very much.